Hi traders, welcome to the weekly review from Trade Easy Way. It's Martin Luther King Day on Monday, so no US markets on Monday. So watch out for that. There's very little data out Monday, so trade very carefully. We sometimes get clean markets when the US aren't around, so I will be looking at the markets, but just taking my time and being careful. Right, I think the markets are going to hit a lot of trouble. This dollar index closed above last week's trading on Friday with the announcements of all the downgrades in Europe came along. I think it's after the close. Some of them might have been during the session as well. But it doesn't take much to see that these markets are really in trouble, and this dollar is leading. The major resistance in the dollar is here at 84, which is the lows of 05, but we've got a trend line breakout in the monthly chart. We are at the 50 EMA, but this dollar index has got a habit of not respecting the 50 EMA. When we broke up here in the stress in the markets in 08, we just ran up, and here in May 2010 we charged up but then quickly moved back down again. I'm expecting this to charge up to at least 84. That is going to cause a lot of problems. Gold is reacting to the dollar. We're trapped between the 50 and the 200 EMA. We've had a hammer down here and two higher closes in the weekly, and the monthly at the moment is clinging on, but if you look at the monthly chart we are at major resistance. Let me just pull that fibs down a bit. This 1640 area is major resistance. So if we get a 50 EMA break, I would trade it. I would not trade it in the middle here. Look at the stochastics high. Stochastics can stay high. Stochastics on the weekly are crossing from the lows, but so while we're trapped in this zone here, I would just steer clear if you're not in it. If you're in it, just keep your stop under that, or at least 1621, ideally 1612 area. Let's look at the stock markets. This is the S&P futures. Since we've opened this year, we have been clinging on to a narrow range, but that to me is a hangman, and we are struggling, and I would expect to see that. We have opened and closed above 2011 highs. No, we haven't. 2011 highs are higher. That's the autumn highs, but we are struggling. If you look at the Nasdaq, bit of a topping tail here. We've got a gap from the 8 on the weekly. We're right on the trend line in the monthly. So the markets have been holding up very well, but it's if you look at the hangman in the daily, we've retested the 8. If we close on below the 8 early part of the week, then that's the sign. Dow is more obviously, to me, a short. Look at that gap to the 8. It has closed higher. Look at the stochastics is crossing high. RSI is only just above the midline. But I think what we've got here is a repeat of what we had here in August. I think we're underneath the. We're just coming into the resistance levels from the summer last year. I think at the very least that gap to the 8 is going to be filled. Once that's filled, I think we'll close lower and drop. But let's not trade the news. Let's wait. You can see the resistance on the daily Dow. Let's wait for confirmation and then sell a pullback and see if we can at least get down to 11,900. But let's see where those markets go. But my bias on the short side And I mean, the way to trade it, I think you could trade it with a very small stop this way. If you take a break of Friday's close and you had a stop, a very tight stop, you could 12,450 is the highs of 2012 highs. If you put your stop at something like 1260, sorry, 12,480 say, so just give it a little bit of a margin and trade the break of 12,385. You could potentially be quite early in on a drop, but you're going to get out pretty quick if you're wrong. I mean, ideally the stop needs to be up there. It's not that big a stop really, considering the risk-reward ratio is still pretty good. 12,550 is a sort of a sell zone up there from July. Yeah, July last year. That's the way I would play it. I think that's the hangman. I think weekly and the monthly suggesting that this could come down. That's a relatively low risk way of playing it. Oil is very strong and is going to come under pressure with that strong dollar. I think the most significant thing to me is this weekly chart. You take the trend line from the 150 from the highs in 2011 right down to, that's not quite right. Okay, sorry, I apologise, I've forgotten how I've drawn this. I've drawn this from the $150 a barrel. Don't worry about this higher number up here. This is a continuous contract, so it makes allowances. To the highs in 2011, last year, we've broken up through this trend line and we're just sitting on it. I think we'll see a pullback to 95 under the pressure of the strong dollar, but I think that 95 will survive and see us bounce up to higher levels simply because of the way the strength in oil in light of the strong dollar has performed very well. I don't believe oil can break below 95. I'm not trading beliefs, I'm trading with charts, so I'm going to wait and see what happens to 95, because that's you can see why I've picked off 95. It's got lots of touches down here. So we're in a box here. It came out of the box for a while in December, but if we can hold 95 and start to see some reversal bars down here, then I would go long. However, I'm not going to short it because of the risk-reward ratios do not warrant a short because the support is too far below it. So instead of waiting for a short, I'm going to wait for a long, depending on how we handle the 50 EMA early next week, and if we do get the drop, depending on how we handle 95. Okay, we'll deal with other commodities first. Obviously, because of the pressure on the upside of the dollar, the commodities are suffering. This is a huge weekly bar in the cocoa. For those of you who took cocoa with me, we closed above the 8, so a pullback to 222.35 to see is a good area to see if we get back to 24.40, 24.50. The monthly is on this huge support. I have to say there is potentially going to be downward pressure on commodities like cocoa because of that dollar. These commodities are going to be very, very sensitive to that movement of the dollar, so just be very careful. I mean, that is a stopping bar on the monthly, but the monthly bar is not closed yet. But the daily and the weekly is still supporting this price. But if we close below 22.55, be careful. If you're in this, if we start closing below 2200, then that cocoa is in trouble. if you're not in this, I would wait and see, and you want to get into it, watch for a pullback to 22.25 and see if it holds. 22.25 is there, so if we get a pullback to there and that holds, it's just under Friday's lows, and we put a hammer on this level here, then it's a buy. If we start to move up again and we get a close above the 50 MA, then buy a pullback to 23.12 area, say. Okay, so 50 MA break is the safer way of playing it. Okay, unless we get a very neat hammer on this level here. So just keep your eye on it and watch for those two areas. Let's have a look at the cotton. That's still holding up well. There's a bit of a hangman bar there in the weekly, and the monthly has got the 20 MA hanging over it. So be careful if you're in this. That's a nice little hammer on the 8 there. But if you took this at any stage, then just ramp your stop up. No entries there at the moment because you're trapped between the 50 and the 200. Coffee coming under serious pressure from markets, including the dollar. Is that shortable? No, I don't think so. The weekly was not too bad. The weekly's holding up. Sugar. I like sugar. I think sugar is a bit of a coiled spring under here. If that breaks above that trend line, I would buy a pullback to that trend line if you're not already in it. I am in this, but my stop is 22.75. I got in here on a break of the bar here at 23.50. The grains are reacting to dollar strength. So the weekly close, if you look at the monthly, to me I think these got a fair amount to drop. If we break below 11.40, we're going to see 10.70 pretty quick, and this 50% is 10.35, $10.35 in the fibs on the beans. Are they shortable? Yeah, I think they are. The strength of that dollar. Pull back to 11.70 to get back to 10.84 will be a good level. And you can see corn is even weaker. Huge drop on the crop reports. Minor pullback for a further drop. The weekly is below the 200, and the wheat is not quite as weak but still pretty poor. Let's look at some bellwether stocks. Apple pulling right back to the 8 but struggling. That's to me, there's a potential reversal bar up there in the weekly chart. Huge gap to the 8. I think that will suffer. Bank of America I've talked about. Lovely breakout here. Pulling back to the 8. Watch out. The weekly has had a decent close in the weekly. Look at all this support down here. That's a bit of a topping tail on that weekly chart under the 20. So that Bank of America looks as if that's capable of coming down to 6 from 6.6. If you want to trade it, you could try and get a close, a break of 6.40. Try and get down to 6, because if it starts to drop, but it's a decent weekly close though. No, I would stay away from that, and that weekly is too extended. RIM has performed quite well. BlackBerry Maker, that's a reversal bar under the 50 MA after the first retest, but tough call with the 8 and 20 below it. And again, the weeklies have 4 higher closes, so can't trade that one either. Let's get on to the currencies. Right, we've got inflation and jobs coming up on the pound this week. We closed just slightly lower than the open close on Thursday's open close. Monthly's at major support, but the weekly, we've had 3 weeks of lower closes now. If we break Friday's low, I think this pound could topple. Let's put the fibs on this. So on the last big move, the fibs will put us at major support at 51.75. There's a bit of a top bottoming tail on here. It's just eking down slowly. It's not dropping hard at the moment, but we're out of this box. We're holding this major support at the moment. If we start closing below this 52.67, then we're in trouble. We're expecting lower inflation and higher jobs, both of which are very, very bad news for the pound. So if that comes in better than expected, then we could hold up, but all pullbacks to the 8 are being sold into at the moment. That was a retest of the box on Friday. So I think I'm expecting this to drop the depth of the box, and the box is 54 to 57, so that's 300 points. We are currently 80 points. I'm expecting another 220 point drop on this. The 220 point drop would put us down there. Oops. Will bring us down to 51. How to trade it? Right, it's already very, very low, so there's no swing trades there. I would just look for any retests of 53.95 area to get short, but there's no swing trades there. Euro, well, the story's on the euro. I think it's all in the weekly. If we break the lows of this week, I think we're coming down to the monthly support at next stop 124. I can see this coming down to 120. 1865 is the low of 2010. Yeah, the low of summer 2010. But I think 124 and possibly 120 on the euro. How to trade it? Well, I mean, that area there was massive, 26.56. If we break that, I think that's toast. So 26.56, there's a stop up there, a 200 and something odd point stop, and you are shorting the lows. So I personally wouldn't recommend it. I would just, if you're a day trader, look for a pullback to 27. Just keeping a track of this Aussie Swissy, incredible chart at the moment. Took a short here and got stopped out, and we're still holding the 8. So this is very, very strong. Look at that monthly. That monthly at the moment is a breakout. That's a very powerful hammer down there, and it's still coming into force. However, that weekly is at major resistance with a gap to the 8. It's a similar bar to here when we dropped. So I'm just keeping a very close eye on that one. That's going to be my watch list. Aussie US, major resistance under here. If we close above 103.75, then we could go, but obviously that strength in the dollar would suggest that we could roll over. The weekly has a nice close, but into resistance, so we're boxed with the potential for the Aussie dollar to fall out of the bottom. So there's lots of touches there. I appreciate we get the correct way of drawing it is down here. I appreciate that, but there's also a lot of touches here. So if we start to break down through this level here, I would short a pullback if this dollar is going to be as strong as we expect. This is the sort of one fly in the ointment, really. I mean, this is the carry trade, the Aussie yen. Look for weakness in this one, because if we're right about the markets, this should drop hard. We're under this resistance trend line. I'm going to keep an eye on this very carefully, because if we drop below 78, we could come down nicely on this. Let's look at some resistance levels. Well, that's the localized resistance. Let's have 1-2 touches here. We break 78. We could come down quite hard on that. Watch that very closely. And this New Zealand US is holding up at the moment, but any US pair is vulnerable, so keep an eye on that. This is a potentially interesting way of playing the euro, because if you look at this euro Swedish krona, that's a reversal bar under the 20 there. If we break that 80.86, we could start another move to the downside. This is quite some downward move after this huge sell-off here. So we have one wave, two waves. This could be the start of the third wave here. We break 88.86. So your stop's going to be above the bar at 89.25, say. The entry is a break of 88.8590, say. Make sure it's broken that 8. And if we look at the monthly, let's have a look at the target on this. I mean, the weekly was a holding bar, but we open and close below that resistance. That's stochastic's low. Okay, I mean the weekly doesn't support it, so we'll have to leave it, I'm afraid. Risk reward ratio doesn't add up. I think this one's very interesting. The US dollar yen holding up underneath in this little apex here from this major down move in March last year. We pop out up through this on the back of the way this daily is behaving. So that's huge support there, 76.50. It's been a slow mover, this one, but that's just broken out above that resistance there. I think this, with the strength in that dollar, the potential strength in that dollar, this one could pop up, and it's a relatively low risk. You took a break of the high at 77.05, say. There is a lot of resistance up there. I think it's a low risk. The fact we've broken that trend line, you could buy a pullback, but even a better way of trading this, to buy a pullback to 76.85, get a stop at 76.56. It's a really close stop, just to see if that could wind its way back up there. We've had a retest of the 50 MA. If that gets up there to the 50 again, I think it'll break. Just have a look at the weekly and the monthly. The weekly's had two higher closes. Monthly is struggling. It's definitely struggling. There's low stochastics and low RSI. So you can see huge support there. We just break up on the monthly above 77, and we can get back up to 81 pretty quick. I think that's a good one. We're just closed just above the 8 on that. We haven't done that for ages. Same for this US dollar, Singapore dollar. We get a close above here. We're going to 133 pretty quick. Weekly's had a couple of lower closes. Sorry, that's the one I'm looking at. The monthly is sitting on this 20 EMA, having closed above it last month. So the monthly will suggest we could go to 134, and the weekly is just sitting on this 50 EMA very, very nicely. To me, these are low risk trades. So we break up here. So the entry, that's a nice little wedge there. We've had 1, 2, 3 waves up. We've had A, B, C, D correction. I think we're ready to start again. I would take a break of 129.67. So there's your entry. A stop's going to be 128.59 to see if we can get to 134. US dollar CAD had a lower close, but it's just clinging on to that 8. If we break up here, I think this could bust. Monthly is got a bit of a messy chart there. Let's have a look at the monthly. Get rid of that. We're getting a compression here. 8.20 is about to cross. Like I said, we bust up. We could get up to 1.2 here. So it's a 50 EMA break. I appreciate it's got resistance under there, but I'm prepared to, if you're not in this, I would just suggest you do this because it's a relatively low risk. This is probably one of the better pairs. So the entry is 102.08, the stop is 101.37, and the target is up there at 106. I still think this, if we've got inflation and jobs coming out of the pound, this is increasingly looking like a bearish consolidation, but it's a little hammer and a stopping bar. And if we were to break above 48.95, that's a horrible weekly. So this pound Aussie dollar is still struggling. If you're in it, you've got a really close stop. I mean, 47.97 or a little bit lower, and just stay in it. I mean, it is RSI, it is exposed. Stay put, because the Aussie is vulnerable. Pound CAD, leave it. Pound yen. You see, there is evidence the pound is holding up. Let's have a look at that weekly a minute. A lot of support down here in the pound. And the pound's right on the cusp. I think everybody's hanging on the data for next week. Next week's going to be really important for the pound. Okay, that's all I've got for you. Monday Traders Roundtable is going to be talking about exits. Okay, so if you're not a full member and you'd like a trial, let me know. Happy to give you a 2-week trial so you can try us out and see the kind of number of points we're clicking up. And because the success in the Euro session room has been very, very high, making decent. I haven't had a losing day in the Euro session this year yet. Every single Euro session has been profitable. So if you'd like to join us, let me know. Feedback is extremely welcome. I'm looking to the feedback I've already had and trying to react to that. More will be welcome. So enjoy the rest of your weekend and see you in the next update.